Finance. We're always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for a live, and this is really live, so really ask your questions during this live stream event of this weekly market update. Today is Wednesday. It's January 8th, 2025. Andy, thanks for coming back on Liberty and Finance.
Good to be here. Happy New Year, buddy. Thanks for having
Happy
me.
New Year to you too. Yeah, we haven't had you for a few weeks because we were over the major holidays. We were both had some house guests traveling, different things like that. And great to be back together. And
It's
our
great to be
viewers,
back with you as well. Next week, I'll have a special treat with me. I'm assuming I'll be able to make it work next week. Mario Ineco is staying at my house, and I'll have him here Wednesday night, and perhaps he can jump on with me. He's a treasure. So two for one next week.
our viewers are very well familiar with Mario, and they always tell us after we have him on to keep bringing him back. So we do. So that's great.
We're gonna play some golf for a few days and hang out, and he's a good man. So I'm looking forward to seeing him, and I'll bring him on with me Wednesday.
Cool. Well, everybody who's on the listening to our voices, if you're doing this on Wednesday night, you know that this is really live. So if you're on YouTube and you are in the live chat, you can go ahead and post a question there for Andy. I'll try to get to all of them during this hour. And if you're not on YouTube, you can jump over onto YouTube under Liberty and Finance. Make sure you're a subscriber. Just click the little subscribe button and you can get into live chat and ask your questions for Andy. Andy, we wanted to get to some of the topics that you brought. I brought a few as well, but one that has been raised with great concern from a number of clients over the past couple of weeks is that a lot of their acquaintances that are late career stage or retirement age are seriously concerned about the safety and risks to their retirements. Most people are, I think, sleepwalking. Most people have no idea because we've all been lulled into some complacency over the past 40 years. And retail investment advisors tend to just give the same advice to everyone. Robert Kiyosaki, who I saw live at the Red Pill Expo in Hartford, Connecticut, said, they just keep saying, oh, have a well-diversified portfolio of stocks, bonds, and ETFs. You'll be just fine. Buy on the dips, hold the market always returns, average 7+% a year, decade after decade, you'll be fine. And I've talked myself with a number of retired people who they don't even want to think about it anymore. They don't want to talk about it. They don't want to think about it. They say, I've already solved that problem. In their mind, they're on the glide path now. They've got plugged into perhaps some dividend producing stocks and some CD ladders and some bonds that are kicking out some cash flow, and they figure out we're good to go. And yet there are significant risks that people may not be aware of. And we've talked about some of those here. We've got a new administration coming in within a few weeks, Trump administration starting. Wanted to get your view of in this new landscape that we're coming into, based on what we've been told so far, what people should be thinking about and perhaps taking proactive steps to mitigate risks to their retirement. And we can talk about any different aspect of that. Some of the ones that come to mind include the banking system and bonds and the stock market volatility, et cetera. So what comes to top of mind for you with the incoming administration and the policies that we've been told are likely to be put in effect on how they might affect people's retirement
No,
risk?
I think they're all interrelated. They're all combined. I mean, when I follow who's been buying gold, I look to the central banks. When I see what's going on in the stock market, I see the insiders selling at a 6-to-1 clip versus buying. In other words, corporate insiders are for every one purchase, there's six sales. And you look at guys like Bezos, who sold 12.5 billion recently, Zuckerberg, who sold 2.5 billion worth of Meta. You look at the Nvidia insiders selling over 2 billion worth of sales. This is all year to date, but just between Zuckerberg and Bezos alone, you're at $15 billion sold. And you know, if the economy was roaring and we would expect the stock market to continue on this massive train moving forward, you wouldn't see that happening. And so as corporate execs are cashing out, individual investors aren't. That's a premise that I would start with, that I would be very nervous. I think we can look at the bond market, which in and of itself is getting nervous as inflation concerns are again reemerging, and they really never left. I mean, the Fed pivoted, um, at 65, 70% away from their lofty target rate. Was making a joke about this the other day. You're taking a cross-country trip from California to New York and you stop in Omaha and say we're there. We're 70% of the way there, but that's okay. That's good enough. And the point of it is that they haven't signaled victory on inflation. They've waved the white flag on it. And we can see that happening as the 10-year Treasury keeps going higher. In fact, the 20-year Treasury, which is something we really don't talk about very often, eclipsed 5% here just the other day. That's a big deal. That's a problem. We're getting into that point where the economy is going to start to shake and rattle, and we're seeing that with all of the longer duration maturities. And so what does that mean for the economy? What does that mean for the bond market, for the ballooning US debt? And what does it say about the flood of new treasury securities that the government's going to have to sell? Who's going to buy them? Does that mean higher rates yet still? Are we in store for a yield curve control, which will again exacerbate inflation as we create money out of thin air by the Fed to buy the debt because no one else wants to buy the debt? And then you look at all of the metrics by which we gauge, are we heading into a recession, which would negatively impact stock portfolios and whatnot. And by every single metric and then some, we're there. The reinversion or the uninversion of the yield curve, the Claudia Sam rule, the increase in money market holdings, which is up to over $7 trillion. All of these things have accurately predicted recessions in the past. And so if I were at that point where I'm very quickly going to be receiving money out of my retirement, I would not have a problem with pivoting. I would not have a problem with selling all of those stocks in my IRA that I made a lofty profit on. Get the hell out of them, just like the big money is doing before
Mhm.
something happens that forces you to get out. Get out now, and I would layer it into incredibly short duration treasuries. As crazy as that sounds to me, I don't know where else you go where you can feel safe and sleep well at night in a market by every single metric is classically and historically
Yeah.
overvalued, and the insiders are bailing ship, and the long end of the bond market moving higher, where the banks who bet again that wouldn't happen are going to be on the wrong side of that bet, especially if rates really start to move higher, which I expect that they will.
I
Uh,
want to jump in there because
yeah.
something you said is so important, and it's a perfect example, a story. I just posted a link in the live chat to a story um, from Bloomberg that talks about the last bond auction here. Treasury auction draws the highest yield since 2007 in bond sell-off, and yet the point I want to bring up is the spin of the people who are chiming in and the experts that they're quoting here, Brandywine Global Investment Management and head of U.S. rate strategy at UBS Securities. They're saying this shows how strong the economy is because it's like, what? This is a sign of if you have to bid up because people aren't willing to take those bonds at a lower rate. It's like junk bonds. You want a higher yield if you're going to be taking on such junky bonds. And yet, so here's the high, and the last line of the article says, still, the auction results will be noteworthy because it suggests that the next new 10-year note, which will debut in February, could wind up with the highest fixed rate in nearly 2 decades. And and it's exactly what you're saying. These are the hallmarks of the starting of the downturn of a huge setback in the equities markets. And when the rates go up like that, then the bonds are going to go down, and that's going to drag the equities markets with it. And yet the spin in this article is saying this just proves how strong the economy is. That they even say that. I'm going to read exactly what one statement in there. It says, the data has reinforced the market's view on a strong U.S. economy and the rates are not restrictive, said Tracy Chen, a portfolio manager at Brandywine Global Investment Management. So this is what mom and pop are being told across the country is, look, this is great. We got high
It
high
makes no
rates on.
sense. It almost makes you feel like you're insane. And and you look at just the underlying market, you can use it in terms of a military analogy where you have limited participation in the equity market in terms of breadth. It has very narrow breadth, and that indicates limited participation. It also indicates that the chances of a correction or failure are far above average. And if you use a military example, you can say, can the market continue to rally with just a few large caps, call those the generals, leading the way, but the small to mid cap, the troops, the Russell 2000, or was it the Wilshire 5000,
Mhm.
these large, broad based indices, which are a better indication of the entire economy itself, a much larger swath of it, are treading water barely, most underwater. So if you don't have the troops on board, the small caps, the mid caps, where I guess you could say there's value. I got a buddy who runs a hedge fund, and that's where he's putting his money. He says that's the only place that there's real value are the small caps and the mid caps. Well, if they're not on board, the rally has no credibility. And that I think is something very concerning, especially on top of all of the insiders pulling out, including insiders in those magnificent seven. So that's something that to me is very concerning. And I don't care how they try to spin it. You know, great, strong economy, but an economy that is indebted the way that ours is,
Mhm.
both on a personal level with record debt, record credit card debt, record mortgage debt, record delinquencies. In the month of December, there was another, I don't know, uh, huge amount. In fact, I can find the number here real quick. Huge amount of commercial real estate delinquencies. Let me see. I wrote it down. Yeah, in the month of December, the delinquency of commercial backed securities that are securitized. They take these commercial backed loans and they put it into a mortgage backed security. The delinquency rate spiked to an all-time high of 11%. And so that's something that we're not used to seeing, right? And so at 11%, that's higher than it was in 2008. This is something that should certainly get the banks very nervous, of course. And I think this is something that the mainstream advisors are ignoring. You talk about the debt ceiling again. The debt ceiling is going to be hit as soon as, well, actually, I think in a week. Uh, it's interesting. They set the debt limit at 45 billion in 1939. They've raised it 103 times, and we constantly are outrunning our tax revenue. This is no different. In fact, the first 2 months of the new year for the government, which starts in October, we've already spent more money than ever before in the first 2 months. It's the worst 2 month start to the Treasury in the history of the government. So he's coming into taking over a ship that is taking on water economically. While there's an awful lot to be excited about with his taking office and getting our culture back, it's not going to be smooth sailing for him in the economy. And for people who are at that age now where they can't afford to lose, this is not about return on your money anymore. This should be return of your money and what you need to do to guarantee that. Look, I could say put it into physical gold in your IRA and cash it out and take possession of the metal. Sure, that's kind of, people would say, well, that's self-serving, isn't it? I don't think it's a bad idea. But if I were trying to be diplomatic, I'd say, yeah, cash out all of your stocks that are in positive territory within the IRA, so it's not a taxable event, and then layer nothing more than 6 month treasuries, still paying pretty darn close to 5%, and continue to monitor that, rolling them over, doing things, whatever you need to do to mitigate exposure, not only to the system, but also to the banking system. And I think that's maybe the best advice. And you can do that, several ways. Of course, now you could just cash it all out, pay your taxes. Now, that's probably not the best advice, but if you did go directly to treasurydirect.gov, I think the banks are in big trouble. Look, the BTFP is down to basically zero. They aren't making any new loans, and the repo market's basically at zero. The liquidity is falling. And that's not a good sign either for the banks who are then experiencing all of this stress with delinquencies in the commercial real estate market and an economy where rates are moving higher and liquidity is becoming far harder to come by. This is all, this is kind of a very, very scary economy that he's taking over, one that certainly underneath the covers is not as rosy as the mainstream media, like that guy you read, are making it out to be.
We've also got a question about the understatement of inflation. We've talked about that for years. John Williams from shadowstats.com has been on our channel breaking it down in great detail. You've talked to us about that multiple times as well. But people, ordinary people, people who've been around a while feel it. They feel it, the pinch, and they know that these ridiculous numbers are being told, whether it's 2% target or 3.6 actual or whatever, are fictitious because they know for food and for medical and for all kind higher education and all kinds of things, parts, repairs, everything. Shrinkflation can try to hide it. There's always that this gets spun around and tried to get hidden, but that people know that they're bucking what it used to be. So that people who can look at their retirement, they think of their nest egg as being in dollars. And yet we've had neighbors, we live in a 55 plus community who were told a few years ago by their financial advisors, you're set, you're good, you're just keep on doing what you're doing, you'll be fine. Now they're told, no, you better go get a second job, or you better move out of this home and move to a county that has lower taxes or something because the taxes keep going up, property taxes, and that affects your HOA fees keep going up, your medical fees, your energy costs, everything keeps going up. So, uh, what is your outlook with a Trump presidency? There's the idea that we may be able to fall back on more domestic sources of fossil fuels, that sort of thing, and that may help in that particular area. But what about all the other proposed changes, punishing foreign countries for being part of BRICS and for trade settlement currencies outside the dollar, et cetera? How do you see that impacting people's cost of living in their retirement plan that may change the whole game for them as far as cost of living in a new administration?
Well, you can see the Biden is making it hard on him to do the drill baby drill and passing laws to make it illegal to drill for oil offshore around the U.S. coast line for I don't know how many millions and millions and millions of miles, and they're not making it easy, and they're continuing to destabilize the dollar at the same time. Again, another whole. You know what? Hang on, come here, you little guy. I got my dog, my brand new puppy, who's playing with the cords, and the computer keeps turning off. This little guy. Sorry about that. I'm gonna have to hang on to her because she keeps pulling on the my monitor keeps shutting off. Anyways, yeah, I mean, I think that when you talk about the kind of things that Trump is ushering in, like the tariffs, for example, even as far as what he's saying about Greenland, we'll tariff the hell out of Denmark, and if the BRICS continue down their path, we will tariff them at 100%. These tariffs are not tariffs. These tariffs are sanctions masquerading as tariffs, and it's not going to be easy. I think ultimately it will face a lot of backlash. You'll see currency wars. You'll see supply chain disruptions. You're already seeing that in China not wanting to send certain strategic metals to us or rare earth metals. So, look, I admire him. I admire him for what he's trying to do, trying to bring back our culture and trying to, calling the Gulf of Mexico the Gulf of the United States. But many of the things he's trying to do are quite provocative. We'll have pushback, we'll have ramifications, unintended consequences. I guess I think that I'm glad he's here and I'm glad he's manning the ship, but I think a lot of the things that he's going to attempt to do will not immediately be easy and met with acceptance. So, I think right now I would be more this risk-on trade that everyone is so enamored with, which would be, risky trades like the AI tech boom and cryptocurrencies and what they call risk-on. At the same time, the insiders are leaving the risk-on party. At the same time, the central banks have doubled down their gold acquisition. And so the people who are in the know, the people who are writing the playbook, um, I think are signaling an opposite agenda from those who are telling us, what the future is going to be, the near future, based upon these policies. And I'm not so sure that they're wrong, to be honest with you. So I think that I would be cautiously optimistic with what he will bring to the table. Very optimistic in terms of, you know, bringing back the American ideals and merit over lifestyle and cleaning up the cities and all the things that I've talked about ad nauseum. But I am not convinced that, and especially with the actions of the current administration spending like drunken sailors and selling the border wall and doing these at 5 cents on the dollar and imposing these drilling restrictions and everything he wants to do, they're trying to stymie. Well, that's just now. What happens once he gets in? And when you talk about a potential rug pull, I mean, the banks with the liquidity being drained out and the BTFP program being done and the reverse repo or the repo market being drained, all of these stopgaps, these cushions, if you will, are gone. Could this could this be the beginning of some event that is orchestrated by the people who are trying to make it difficult on them? Yeah, maybe. And look at where all the money is. It's in three groups. It's 7 trillion in treasuries. You got a gazillion dollars in seven stocks and a whole bunch in cryptos, which have been very financialized. And the banks are the key to it all. And I think what happened in Lindsay, Oklahoma, which got zero media attention, should be front and center in everyone's mind. And like, could this be the fuse that sets things off? And I think the banking issues are very concerning to me and have just gone by the wayside. But remember, it was October when the folks in Lindsay lost half of their uninsured deposits. Well, what happens when a bigger bank fails due to this commercial real estate cascade? The largest default numbers in history, more so than the great financial crisis. So, how close are we to a big bank collapsing? The realization from the public that it's a bail in. One big bail in lights the fuse. People don't know what bail ins are, they have no idea. No one knows what happened in Lindsay, Oklahoma. It's ridiculous, it's disgusting. So, all of these things, there's a lot of potential, very scary points that he would have to deal with, potentially, and maybe even early on. So, ranging from the debt ceiling all the way up to the banks and the bond market and rising rates and indebtedness and, just to name a few, not to mention very ambitious goals that he has that won't be met with great enthusiasm by a large majority or minority, whatever it may be, of people that will not go down, I think, without a fight. So, yes, I'm thrilled he's here, but no, I am not convinced that 2025 won't be filled with all sorts of surprises. And quite frankly, maybe more so than people think, because as you have record optimism, record enthusiasm, that's the time to be looking the other way. All great contrarians would tell you that's a dangerous thing. When everyone thinks this is it, we got it made, I got it figured out, everything's going to be great. We haven't addressed the problems yet. So they're getting worse by the day in the meantime before he gets in there, and they're doing that purposely.
The thing I wanted to bring up next is, folks, we have 100,000, 105,000 now. It keeps growing every month. Subscribers just on YouTube, thousands more on Brighteon, Rumble, SoundCloud, etc. Our audience here today, you're with us. You're the group that we hang out with here every Wednesday in our weekly market updates. You ask the questions and you try to have some sanity, try to get some information from this independent sources, all the guests, including Andy, that we bring on. If any of you are personally involved with shepherding or stewarding funds on behalf of either, whether it's a church, educational institution, insurance company, any endowment, etc., reach out to us, because we can reach out. We're reaching out to individuals here. They're calling us, individual householders, head of household moms and pops across the whole country, trying to take protective steps, just as we always have here when we were reluctant preppers. And we can help one family at a time that way, one household at a time. And that's great. We'll continue to do that. But if you're acquainted with anyone who is shepherding funds or stewarding funds on behalf of an organization or a large group of people, it could be hundreds, it could be thousands of people, and they may be as unprotected as most individuals are. And that would be a terrible thing for no matter whether it's an insurance company, whether it's an endowment, whether it's a school, whether it's a hospital, whether it's a church, to have their nest egg, their portfolio get hurt badly by the changes that may be coming in the next quarter, year. We don't know, but the cards don't look good. And if there's anything that you can do to help bridge a connection to introduce them to us, please do. And we'd be happy to try to talk with them about what their plans are, what their strategies are to protect all of those people for whom they're shepherding funds, and how some of the strategic strategic tangible asset may help them to weather the storm. So please think about that. If you either directly are involved, or if you know someone who is, or you know someone who knows someone who is, please help try to make the connection. And you can reach out to us directly, and we'll be happy to have conversations with those people to see if we can help them protect more people. Um, Andy, one very specific question that was asked by a viewer this week ahead of this, and we've got some new ones I've been capturing in the live chat, was from Bill M. in Florida, who had a situation he was aware of where at end of life, uh, his father had had a significant amount of physical precious metals that were unfortunately stored in a safe deposit box in a bank, and got cleaned out by a family member, and it was very difficult for those who were trying to make sure that the owner, the original owner's
Terrible.
intentions and wishes were honored. It raises questions about what's the best way approaching end of life planning, legacy planning, that sort of thing, to make sure that the metals are held in such a way and in such a structure that your intentions as the one who worked so hard and diligently over the years to accumulate that nest egg are honored after you pass,
Be
after your passing.
proactive. That's the only way. Money makes people do really stupid things. I hear it all the time. Be proactive. If it were in one of our storage facilities, we have 9 BRICS facilities all around North America. The application allows you to establish specific beneficiary desires: first, second, third, tertiary, primary, however you want it to be, equal allocation. But if it's in a safe deposit box and someone has access to it as a signator, there's not a lot you can do. And if it's not done proactively, no one wants to address their mortality. But the truth of it is, it ought to be addressed. It ought to be spoken about. It ought to be understood. It's a little difficult after the fact. My heart goes out, but not a lot that they can do other than to be proactive before the inevitable, and should be made very clear that A, B, C, and D gets this, and equal share and whatnot. And that's the nice thing about gold and silver. It doesn't need to go through probate because the value is consistent and you know what it is: 111, 111, 111. It's easy. So being proactive is all that you can do.
There's another question here that was you've talked to us often about this global divide between the Western financial BRICS nations. Alan Livingston says, what would happen if Mexico and Canada approach BRICS?
Well, I don't know. I mean, Mexico had expressed interest in joining BRICS. I doubt that they will, but certainly, it would just add to being alienated to the rest of the world. You could argue that's been the path that we've been on for quite some time. We haven't heard anything about Mexico wanting to join BRICS recently, other than expressing interest in it a couple of years ago. um, it would be an interesting thought. And you think about, and I don't mean to go down this road, but you think about Putin and how he feels with NATO infringing upon their borders. Well, how would we feel if you have, a BRICS? Now, they're not a military organization, at least not yet. But what if 5 years from now that happened and you had BRICS military comprised of Chinese and Russian soldiers, right outside the border in Mexico and Canada? You can understand how that would upset the people in this country. And I can understand why it upsets Putin, not to make any statement on that war whatsoever, just to say that's how he feels, that's how we would feel, and we wouldn't like it. Um, and, I don't know that that'll happen, but what I do know will happen is that we are seeing more and more and more, de-dollarization, and they're moving in that direction. at least in terms of de-dollarization. The global net purchases by central banks reached 53 tons in November. That's the most in 14 months, and it's the 18th consecutive month that the central banks have purchased gold. That they have doubled in November their 12-month moving average. Um, and the 794 tons that they bought in the first 11 months of 2024 was the third largest amount in the century. And it was led by Poland, Turkey, India, and China. Um, the countries around the world are not coalescing in and moving and infringing upon U.S. sovereignty, like in Mexico and in Canada. But what they are doing is they're moving away from the dollar and from the U.S. Treasury. And this is a big deal. I mean, it can't be any bigger as far as I'm concerned. And um, then you see things that we're doing at the same time, which would incentivize these countries from moving away, incentivize countries from wanting to hold dollars. Where on today, President Biden announced another $500 million military aid as he's walking out the door for the Ukraine. You got Los Angeles in flames. My assistant's parents are very wealthy. They just lost a $20 million home, gone in Palisades, gone. Everything in their home is gone. And there's no water in the hydrants. And the infrastructure in this country, it's ridiculous. And everything that would inspire countries wanting to take part in investing in this country, we have done our best to screw it up. So I don't think we have to worry just yet about them infringing upon us physically in Canada and in Mexico. Heck, Trump wants to make Canada another state, which would be kind of funny. But the bottom line is that what we are doing leading up to Trump taking office is everything we could possibly do to crystallize the rest of the world moving away from the dollar and from the treasury market. And that's probably even more dangerous and more ultimately destabilizing to this country than would be a physical presence to our north or south.
Question here. Actually, it's a comment followed by a question from Fazdal. Panama might want to hand over the canal. The problem will be dislodging China from those ports on the ends. Andy, you talk a lot about the One Belt Road, One Road initiative. How does this relate to the Panama Canal? What do you think Trump will do?
I don't know how it relates to the Panama Canal. It would certainly make sense for it if we could actually do it. It would certainly give us a stranglehold, I guess you could say, on the shipping lanes, because much of what the BRICS are right now is not only an organization for all of the things we've talked about, but they have a stranglehold on much of the world's shipping lanes, both on sea and on land, and that's growing fast. It really is. You look at the Belt Road. The Belt Road, you have, I don't know, 175, 160, 175 countries that are joining it, the majority of human population. They're coming up with a common settlement currency for the Belt Road, and it's different than a common settlement system for the Belt Road. So all of these countries will have dollar alternatives. You look at the things the BRICS have done, the North-South corridor, which will allow much easier shipping than going around the Cape of Good Hope, a much faster way of doing things. You look at all of the things that they are concentrated on, and it is either natural resources or shipping lanes. So I would assume that if Trump were trying to push back a little bit against that, taking control of the Panama Canal would be a big step, because those countries are at this point representing the majority of all of these land and sea routes and increasing their membership. So that's a trend that will continue, and I would be all for it if he could pull it off. I think it would be a strategic decision for the U.S.
We have a question here from Off-Grid Princess. Andy, how will tariffs and inflation affect precious metals prices?
Well, certainly inflation, we all know what that should do for precious metals prices. Trump is even talking about putting tariffs on metal that comes into the United States, which this is one of the reasons you're seeing again this big spread between the exchange for physical price and the spot price, where if you have to exchange it for physical, across the globe, it's going to be a whole lot more expensive right now, fearing these tariffs. In other words, if they wanted to buy a contract here and exchange it for physical and take it back to the United States, the premiums have blown out because the fear is that once he takes office, he'll put tariffs on precious metals imports as well, which would push the price up tremendously. Inflation, obviously, the price should go much, much higher, and that's really what the whole premise of owning gold is. It's in silver. It's not that gold and silver are going higher. It's that the dollar is being inflated out from underneath us. I asked Judy Shelton the other day in my interview with her, I said, who came up with this boneheaded idea of a 2% mandate? Why not zero? Because with a 2% mandate in 10 years, you've lost 20%. I said, my father I'm sorry, this little dog is insane and she's all over the place. He graduated college in 63. He was married at that point, my mother, and he said, I made $6,500 a year and I could live comfortably on that. Your mom and I could live comfortable on that in 1963. So, have things gotten that much more expensive, or has the dollar lost that much of its purchasing power? So when we look at you look at, imagine this was real. This is fake. It's a bank. But imagine a COMEX 100-ounce gold bar in 1974 when the exchange was founded. Gold was $42 an ounce. So, 42. It would have cost you for a 400-ounce gold bar like $14,000 to buy a 400-ounce gold bar in 1974. Well, what does it cost today? Is the price of gold go that much higher to where it's almost 1.1, $1.2 million? Or did the dollar lose that much of its purchasing power since 1974? My dad bought a Corvette in 1973 for $6,500, a Corvette Stingray. Now they're 116. The point of it is that over time, inflation is an insidious tax on your wealth. And so what gold does is it doesn't go higher. It retains its value in an inflationary environment. And everything Trump is talking about is inflationary, whether it be tariffs, which will mean higher prices to the consumer, or whether it be an inflationary policy, a weakened dollar, low interest rates. These all mean softer purchasing power. So I would say inflation is here, and you can see that the bond market sees that. That's why rates are going higher. And with all things being equal, even if they are able to trim $2 trillion off the deficit and off of the stupid spending of the government, that still leaves over a $1 trillion deficit every year. We're not addressing the root problem, and that is the fact that the deficit keeps adding to the debt. And by 2031, 100% of income tax revenue, according to the Congressional Budget Office, goes to pay the interest on the debt and mandatory entitlements, which ironically are off balance sheet, Social Security and Medicaid and Medicare. He won't touch those. He already said that. So, inflation has to stay here because no one wants our treasuries at these rates. So if rates, and that means rates have to go higher. That hurts the economy. That hurts the banks. And if not, that means yield curve control. That means printing money out of thin air to buy bonds. That's Weimar Republic. That all leads to the same road. And, who knows when this all happens? They've been masterful at being able to keep the ball up in the air. But speaking, just speaking practically, at some point, the jig is up. So, yeah, for the people who are retiring right now, I don't know. I would be more concerned about their kids, people our age who, things may be a little bit different over the next 5, 6 years. Yeah, there is certainly reason to be optimistic, but we're talking a long road to hoe to bring back manufacturing, to bring back the things that made this country great, and to get there, it's going to take maybe a reset, and short of that, a whole lot of debt restructuring, which is not going to be easy. It's going to be painful. So, inflation is here to stay, and it's not going to go away. And with that, that would mean higher interest rates. And so all of these complexities that we have to think about, to me, all boil down to kind of one thing, and that is that over 20 years, the suppressed interest rates created massive, massive illusions and distortions in asset prices. And people are not prepared to understand what those asset prices really are when they find equilibrium with the rising interest rate environment. So, I guess I wonder every time I have these discussions, is this why Trump is here? Is he here to orchestrate a controlled demolition because he is the expert of bankruptcy and restructuring? Does he know? And do his advisors tell you we're screwed? We're so far down the rabbit hole, there's no way out. So we can manufacture this implosion. And what does that implosion look like? What does he roll out? Does he roll out constitutional money or does he roll out the CBDC? And that would be the question. Is he on the horse or is he the Trojan horse? If he's the Trojan horse, then they roll out the CBDC is what that's what the Davos folks want. And that's what the WHO wants, and that's the Klaus Schwab. That's what they want. They want a central bank digital currency. Or do we go back to constitutional sound money? Do they revalue gold? Do they have a Bitcoin strategic account and revalue gold and have assets that allow them to create a new monetary system based off of commodities with a marriage of blockchain technology? Maybe. And I hope people understand that I voted for Trump and I thank God he's here. But if you don't question this stuff, you missed out on everything that we've been through in the last 4 years. And you have to ask yourself, the dude is the expert of restructuring and bankruptcy. No better person to bring on board. Bring on a cabinet that inspires unity and patriotism. And we did all we could with Doge, but boy, we're in big trouble. And we all got to do this. And here's what's going to happen. And boom, we transition into a new system. And again, do we bring out gold and silver backed currency with or a commodity backed currency using distributed ledger technology, or do we go to a CBDC? These are the questions that have yet to be answered, but people should ask themselves that, even if it's only a minute possibility. In 2019, if I told you any of the crazy stuff that went down over the 4 years was going to go down, you would say, I bet you everything I own that none of that happens. And look what we lived through.
Yeah, it was 2 weeks to flatten the curve, and now it's a 5-year anniversary is coming and going. So people need to be aware that what's the playbook that's been used on us is being warmed up again in many different areas. We have to be taking proactive stance. You said proactivity before when you're talking about end of life and legacy planning. I think we need to be proactive, just like we've talked about for years on this channel with reluctant preppers. And in fact, we've just recently again interviewed Joel Salatin about securing your food supply and how those that are at the helm seem to be doing everything possible to add risk to our food supply going forward.
Disrupt it.
So,
Yeah.
yep, to disrupt it.
One other thing that I'd like to mention too, in my interview with Judy Shelton, I asked her some tough questions. And I said, what about the gold not being audited? And she says they always come up with these stupid excuses, too expensive and logistically challenging. And she's like, that's hogwash. We're the United States, spend a few $1 million and get it audited. And that's what she would advise. And I asked her about revaluing gold, how Cynthia Loomis, she said she's a big fan of Cynthia Loomis, Senator Loomis from Wyoming, and an advocate for what she's talking about, revaluing gold. She didn't go out and fully say it, but she more or less said, yes, that is a strong possibility, and that they would issue, she believes, on July 4th, 2026, which is the 250-year anniversary, they will issue, Trump will issue 50-year treasuries pegged to gold. And then she said something very interesting as well. She said, and then I could see stable coins being issued backed by the 50-year treasury collared with gold. And this is a woman who could very well be in the Federal Reserve. She was an advisor to Trump. He wanted her to be the head of the Fed. She's very smart. And I think the bottom line is that when I look at everything I see all this talk of crypto and profit and greed and risk on, and the central banks are doubling down on their gold acquisition, hand over fist. And 45 million ounces of silver delivered off of COMEX, either through flat out delivery or exchange for physical in the month of December. Who's got that bread? Where's it going? So we're getting to a point where I think these countries, and they're going out of their way to hide it. Saudi Arabia got busted for not reporting it to the IMF. Sorry, we made a mistake. Well, the import-export numbers outed them. Same thing with China. A recent article just came out in Reuters the other day saying that they think that the numbers they've been buying are 10 times understated. 10 times. And that they have never stopped buying all along when they said they took those few months up. No, they didn't. They just were hiding it and buying it directly from the miners or buying it through the People's Liberation Army. So you see a concerted effort to hide the de-dollarization and to mask it. And after what the BIS did to the BRICS nations at the 12th hour by pulling out of Bridge, saying we can't work with a country being sanctioned, forgetting that Russia was the R in BRICS, after 4 years of working with these countries to develop it, I don't blame them for being less than forthright. But the one thing that I see through all of this is that the central banks keep buying gold and possessing it, repatriating it. And when I hear someone like Judy Shelton say that's in our future, then I would simply say, especially for those retirees, if you've made a nice profit along the way, get the hell out. What do you got to lose? A lot more than you have to gain. And especially when markets are at all-time highs and the insiders are selling 6 to 1, what more do you need to know? And that would be my biggest piece of advice. And everyone is so infatuated with risk on. That's the exact time. If you were having a beer with Rick Rule right now, he'd say that's the exact time to move the other direction. And that's what a contrarian does. So one of these times, this broken clock of ours will be right. And even though gold was up 30% this year, it feels like it didn't do anything, right? Because we live in this instant gratification,
Mhm.
triple your money in 3 week environment that's going to hurt a lot of people because that's what they believe investing is. And my whole career, 35 years, says, no, that isn't what investing is. And no, this isn't different this time. Um, I think there's just a lot to be cautious about, truly do.
Our viewers here are well aware of trading coach Gregory Manarino from traderschoice.net saying you have to become your own central bank. You talked about central banks around the world doubling down, acquiring tangible assets, gold and silver hand over fist. And he says you have to become your own central bank. So just really quickly, so we don't forget, I'm going to take just 3 minutes here with you to show our weekly specials so that people who do want to become their own central bank can do that. So let me just share this quickly.
There's a fourth special too,
Yep, I got
because
it. I got it ready for you. I
I
got it ready for
announced
you.
the fourth special today on Bix Weir's channel, or I talked
Yeah.
with Bix on the phone and he announced it. And then I did with Jean-Claude. And before you even show those, I want people to know that next week or the week after, we will have the best special we've ever had. Guaranteed 1000%. It will be the best special we've ever offered. Okay. So those are, oh, look at that. Look at how you are really on the ball. That's what I told Bix today. Buck 69 on junk silver. That's the best buy that there is in silver. It's not even close, in my opinion. And we've talked about this on your show a lot that um, during the entire pandemic, there was nothing even close to as high premium as junk silver, with the exception of
Mhm.
silver eagles, which were higher. Nothing else was even remotely as close. And now they're below everything. It's the best buy. It gives you utility. It's issued by the Treasury. And it has great utility, but it had massive premiums. Now it doesn't. Love those. Love those. So those are cool also. The Falcon are part of the originally the Call of the Wild series, and those are the birds of prey. And that's from 2014. I don't know how many we bought. I'm sure they're in sealed boxes. They only made 1 million of those, 1 million of each one of the issues. And from a standpoint of collectability and buying them at a bullion price, those are very cool because they'll make millions and millions and millions of maples and millions and millions and millions of eagles. But those are again the purest silver coin in the world at 495, limited edition, but sold at a fair price. Uh, they're fine. I like the Britannias. I hope I don't get in trouble from my staff for saying this, but I'd rather buy the Gold Eagles 1/10 ounce. But those are cool. I mean, they're less money. They're a better value dollar wise. And I think having small coins is paramount. Having the utility is fantastic, especially with all of these states passing legal tender laws. I like them a lot. Most of the laws say any sovereign mint. Some say U.S. only. But for a small 1/10 ounce brand new coin, those are going to be as inexpensive and as beautiful as any. In fact, they might be some of the most beautiful coins. Their craftsmanship are second to none. I like the American Eagle better, just saying, but you're going to pay more money for them.
And finally, 1 ounce gold maples.
Yeah, 1 ounce gold maples, it's boring, blah, 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 but that's a hell of a price. A really good price. I mean, a really good price. Um, that's might be the best price I've seen on them in years. I didn't even realize how good of a price that is. And that's indicative of the market right now. What's interesting is that on the wholesale level, way up high, the 1,000 ounce silver bars and the 400 ounce gold bars, they're all being delivered off the exchanges, the 100 ounce COMEX bars. There's massive rehypothecation and which is selling the same contract over and over and over again. And yet, over the last several months, in particular since Trump took office, there is a tremendous weakness in this industry that is providing an incredible value because the central banks who know the playbook are doubling down. They're always ahead of the game. But I will say that I'm taking part in a massive, massive purchase, the biggest I've ever done in my career, of things that I would buy over anything else in gold. I'll leave it at that. But simply to say it ought to be the best specials that I've offered in my career at the best prices. And I think people will love it. I don't think I'll be able to do it next week. Maybe, probably the week after. They're doing my warehouse next Wednesday. So probably a week after, we will have something really special. Now, these are great. I mean, you're buying in gold maple leafs $40 cheaper than they normally are. You're buying a pre-65 silver five, six, seven, $8 cheaper than it was 18 months ago. And so, these are all good values, but they're not special. Maybe the junk silver is. They're just special prices. What I'm going to bring to the table in the next 2 weeks will be really special. So can't wait to bring it to the show.
Well, Andy, I'm always grateful, and so are all of our viewers who come to this weekly market update because they want to hear from you from the insider's perspective of what's going on inside the bullion industry and in the supply chain, and also with a perspective of geopolitics and history and how it rhymes. And I know that you're a student of not only Judy Shelton's, but also Alistair and a lot of others. Then you put it all together and you connect the dots and help to spell it out for us in terms that everyone can try to understand, and it
Appreciate
benefits
that.
me, it benefits all of us. So guys, everyone here, thank you for being here. If you remember, half of our viewers are not subscribers, so if you're one of those viewers who's not a subscriber, just click the subscribe button. And if you want to get on our free mailing list, just go to libertyandfinance.com, put in your email address, click submit, make sure you confirm on the confirming email. You'll get one email in your inbox per day with our latest interviews, including all the interviews with Andy and any specials that Andy comes out with, and he's coming out with more and more every week. So helping all of us to become our own central banks. And again, just a reminder, if you or anyone you know or anyone you know knows
Hmm.
is a steward of funds for a larger group, whether it's for a church or a school or a hospital or for an insurance endowment or whatever, if that they're watching over funds on behalf of people who are counting on them to keep them out of harm's way, but they may not be getting some of this information from independent sources like Andy is presenting to us. Please make an email connection to us. You can make a connection, including us here at Liberty and Finance at protonmail.com. And if you look on libertyandfinance.com, our website, you'll see my direct phone number. And please do loop us in. Andy and I will be happy to talk with those people about how they can protect hundreds or thousands of people with a very small change in perhaps a little adjustment to their investment strategy. Rick Rule has said, in fact, he said, if some of these insurance managers would just invest just an eyelash of their endowment into gold, for example, it can do an amazing job of helping to protect those who are
Oh,
there
yeah,
that they're shepherding for.
they would. And I want to leave you with two market truisms for those retirees. First one, exponentially rapidly rising or falling markets usually go further in either direction than you think, almost always do. Their corrections are almost always as brutal as the advances were exhilarating. They don't go sideways. You have a massive upside and it's a brutal correction on the downside. And that's usually how markets work. So be careful of these markets that have gone straight up and have done so well as the insiders are leaving. And the last piece I would leave you with is from Warren Buffett. He says, buy when people are fearful and sell when they are greedy. People are greedy right now. You have the greatest amount of optimism in the stock market and its potential performance. Like over 45% of people say it won't even fall by 10%. That's like record territory. So for all of those people that you asked at the onset, the people that I would care the most about, giving them advice that wouldn't hurt them, the people that right now don't have a chance to make it right because of time, um, you know, profit's not a four-letter word, and get out of harm's way. Do what Zuckerberg is doing, do what Bezos is doing, and get out of harm's way, and be glad that you leave the casino a winner. Most people don't. So, anyways, Dunnigan, to you and your family, a very happy and healthy and prosperous new year. I really do think, I always said 2024 was going to be the crazy year. I think 2025 is going to surprise us all with lots of craziness. Certainly Trump is going to upset the apple cart and turn everything upside down. So let's say a prayer for him and for our country, and hope that things go smoother than in the back of my mind I anticipate they will. But look forward to picking up with you next week with Mario. And the week after that, I will be out at the Vancouver Resource Investment Conference, the one of only two I go to, Rick's, with you down here in my backyard in Boca, and the other one up in Vancouver. So a shout out to Jay Martin. It is an amazing conference. Any of you have an opportunity to go to the Vancouver Resource Investment Conference, do so. Look me up. We'll have a beer in Vancouver. But other than that, I hope everyone stays well, and Happy New Year to you all.
Happy New Year to you, Andy, and to everyone who's out there in our Liberty and Finance family. Thank you all for being here. And we're going to
Happy New
sign off for
Year.
tonight. What's the name of your little darling?
Mila.
Mila?
Yeah.
So
A
cute.
combination of our two dogs and our one who we lost recently.
Y-
So
Yorkie?
Yorkie, and
If, well,
she's thinks she's about 150-pound German Shepherd. That's what she thinks she is,
yeah, yeah,
but she
yeah. They are on the inside. So if you ever want to get her to behave better, you might want to just shove her inside your shirt next time rather
I've
than
done
have her
that, and
outside.
I've done that, and she, because it was really cold here in Florida recently, and she likes it. She doesn't move.
Yeah,
You're right. She
yeah,
just
yeah.
sits there.
Yeah.
Interesting.
Okay. Thank you,
Bye,
everyone.
everybody.
Good night. God bless you all.
God
Take care.
bless. Take it easy.